To begin with, Nigeria's economy is facing significant challenges, including stagnant growth and inadequate government revenue collection. Now, this has resulted in a lack of investment in essential services like healthcare and education, leading to high levels of malnutrition and child mortality. Bill Gates, during his recent visit to Nigeria, highlighted these issues and emphasized the need for urgent action to address them. To move forward, he says Nigeria needs to improve its tax collection and efficiency and also to invest in healthcare and education, and the private sector also needs or has a crucial role to play in supporting Nigeria's development. Bill Gates Foundation has already invested $2.8 billion in Nigeria, and he encourages others to follow suit. Now joining me on the conversation to discuss this further, we have Basil Abia. He's a co-founder, Veriv Africa in Abuja. Hello, Basil. Thank you for joining us this evening.
Thank you, Dawson. Good evening. Pleasure to be here on News Central yet again.
It's a pleasure to have you. So, Basil, what are your thoughts, looking at the evidence provided by Bill Gates' claim that Nigeria's economy has stagnated? He talked about key issues like low tax collection, inefficient use of government funds, underinvestment in healthcare and education, and also high levels of malnutrition and child mortality.
Yeah, so I agree with Bill Gates to an extent. I think the only extent I don't agree with him is the numbers, the data he provided. He said that the GDP to revenue ratio has surpassed 50%. I don't agree. The numbers, of course, from the Debt Management Office of Nigeria, it's still in its 40% range, about 46.7% to be exact. That's the GDP to revenue ratio. But again, that doesn't mean that he's wrong about the situation. The economy has obviously stagnated. There's no doubt about that. We have a bolstering debt problem that can lead us to a crisis, a national economic crisis, and even, of course, sever some of the social rifts that we've seen in that sense. In the last 10 years, our public debt profile has increased by over 1,000%. Over 1,000%. Very important that I highlight this. And when you have a public debt stock of about 121.7 trillion naira, therein lies a big problem as well. Even though I have made some corrections with the data pronouncements or announcement that Bill Gates made, 46.7% GDP debt to GDP ratio is a crisis level number. The world recommended threshold is 30%, and we're already far more than that. So
he's saying it's 50% means we're in crisis.
Yeah, we're in crisis whether it's 31% or 46.7% or 50%. It's just semantics here. But of course, I work in a data insights business. It's important that I do or come with the exact numbers so that people aren't misled and people already have the context. But the core of his argument is spot on. We have a malnutrition crisis, as you know. He is planning to donate another 4 million micronutrients that will be disbursed to pregnant women and nursing mothers, mostly pregnant women. It is a welcome development because, as you know, we have a protein scarcity problem in Nigeria. And the price of a lot of the protein that we like to consume in Nigeria continues to increase due to a very high food inflation rate. We have a food inflation rate of about 39%. We have a headline inflation rate of about 33%. A number of investments flow to the core sectors in the Nigerian economy have also slowed down. For instance, we didn't get up to $1 million in FDI in our oil and gas sector last year. That is a disaster. It basically means that we are not able to get in capital investments to bolster the core productive units of our economy. So definitely the economy is stagnated. We do have some positive news, and the positive news, of course, is that the GDP report from MBS came in, and we did slightly better than we did in Q1, in Q2, but that's not enough.
Our
economy
Basil,
should not be growing. Yeah,
I know you said you don't agree with Bill Gates' GDP to revenue ratio, but can you, since you're good with data and you have an idea, can you compare it to the last 15 years that he actually talked about? How does the revenue to GDP ratio compare to 15 years ago?
No. Don't get me wrong. Like I said, he's Correct. He's spot on. My only interchange or my only interjection is to get the exact GDP,
revenue,
GDP to not GDP to
revenue
revenue
to
ratio
GDP.
per se, but that, yeah, debt to GDP ratio. Sorry, forgive me. So
Okay.
the debt to GDP ratio, he's saying, has exceeded 50%, and I'm saying according to data from the Debt Management Office, it's 46.7%. But that doesn't mean we're not in crisis level. We are in crisis levels because according to global recommended threshold, your debt to GDP ratio should not surpass 30%. And for an economy like ours that is very fragile, we're already at 46.7%. So yes, we have a problem. 10 years ago, our debt to GDP ratio was not 46.7%. It was far lower. Our debt to revenue ratio was far lower than it was. So 10, 15 years ago, we were in a better state in terms of our fiscal health. We are far worse now. That's what I wanted to say. I just wanted to ensure that we were clear with the data.
Yeah, but even at the
presenting.
46%, you know, what implication does it have on our country's economy? We know we're in crisis already, but what implication does it have on the economy?
The core implication is that the federal government is going to find it really difficult to be able to raise financing to distribute to the core productive units of the economy. Human capital arrangements, for instance, the federal government is going to find it really difficult to be able to send monies to our public healthcare systems. They would find it difficult to allocate monies to our public education systems, as well as, you know, provide the resourcing for our security arrangements to be bolstered. Our food security initiatives will also be very difficult or untenable in terms of resourcing to be able to galvanize action and execute. So the fiscal wiggle room for a number of policy analysts who are listed here, the fiscal wiggle room is tougher and tighter because of this increasing debt to GDP ratio. And that also means that we are going to go back to the international debt markets to raise financing. And we are increasingly crowded out in the international debt market. Because remember, one of the frameworks for accessing international debt, especially dollar-based debt, is that your fiscal health continues to improve. And so if your fiscal health isn't improving, then your credit ratings continue to tank. And if your credit ratings are tanking, you're basically saying or telling the creditors that, well, if I take this amount of money, I won't be able to pay back in health or in good health or in good faith. And so, yeah, the core implication here is that we're going to find it really difficult to continue to access financing to carry out the core projects.
All right.
May I even add that we're going to find it difficult to pay salaries in the coming months or years.
Of
That's
course.
how bad
We'll
things
come
are.
back to, you know, the debt talk later. But, you know, since you agree that Nigeria is actually stagnant, let's go back to that. Can you share with us or tell us some of the historical and structural factors, you know, that have contributed to Nigeria's economic stagnation?
The economic stagnation here will be first and foremost that we have core energy issues that is affecting the ability for us to be able to attract foreign direct investments to come and set up shop here in Nigeria and contribute to our productive units or our productive capacities. And so because of the energy poverty that we currently have, we are finding it really difficult. And like I said, even if you look at the manufacturing production index, the PMI numbers, the data that we've looked from the PMI numbers, manufacturing is continuing to shrink. You know, last year, Manufacturing Association of Nigeria said that 40% of their members had either closed shop or reduced their production hours. And that's just the truth. When you have the situation where your productive capacities are continuing to shrink because of the energy crisis, the vast increase or the steep increase in diesel prices, for instance, let's not forget 98% of the manufacturing sector, 98% of the manufacturing sector self-generate their electricity. Do you know what that means? It means that almost everybody in the manufacturing sector has a diesel or PMS fueled generating set for them to power their operations. And you have a situation where there is also price volatility from diesel. You know, you wake up one morning, diesel is around 200 naira per liter, and the next morning, diesel is about 1,000 or 1,200 naira per liter. That's the situation that we saw in between 2022 and 2023. And so when you have this productive capacity shrinking, basically, it translates to the GDP calculation. So the GDP continues to shrink. the devaluation, for instance, of the naira to be able to allow for hot money cash flow, in our equities market, for instance. Last year, when the naira was devalued, also contributed to the shrinking of our GDP. Now, according to data from the International Monetary Fund, IMF, this year, our GDP is expected to shrink to about $273 billion US. This was an economy that was $500 billion in terms of GDP valuation. We are now having our GDP valuation halved, largely due to the reduction in productive capacities, of course, our bolstering public debt stock, but most importantly, the devaluation or the weakening of the naira. So, yes, these are the pictures, or these are the parameters with which we are able to analyze and say that the Nigerian economy is stagnating. Let's not forget the inflationary burden.
Oh, of course.
We have headline inflation at 33%, full inflation at 39%. We now have the PMS price increase now to over 800 at 90 naira. Yeah. In some parts, PMS is currently being sold for over 1,200. So when you put all of this together, you know that the inflationary environment is going to be untenable in the coming months, and the economy is going to further stagnate. So all the data is pointing out that Bill Gates is absolutely spot on.
Okay. Now, let's go back to the debt talk now. I know I asked you of its implication, to our economy. But what about, Nigeria is the third largest, according to, the latest calculation, Nigeria is the third largest debtor to World Bank's IDA. Now, does it have any implication on our economic sovereignty?
The implication of our economic sovereignty of that number is, again, we're going to have a Kenyan situation where when next we go to either the World Bank or the IMF for more public debt, we are not going to have the sovereignty around how to do our fiscal management. They're going to dictate to us the steps, the modalities with which we're able to access further funding from them. And in all honesty, for them, they're creditors. Creditors have to be able to build frameworks with which they're able to retrieve their money. So I'll take a typical example. You go to Lapo Microfinance Bank, say you're a Lagosian and you go to Lapo Microfinance Bank, and you're asking them for a 5 million naira loan. You no longer have economic sovereignty around the decisions with regards how you're going to galvanize your financing, because Lapo is going to dictate to you, this is what you're supposed to do with your business for you to qualify for the 5 million naira credit line to your business. And this is the same metaphor, the same metric you should be able to use for Nigeria with regards to the implication of us being the third highest debtor to World Bank, is that going back to them or going back to IMF to access financing to carry out a number of key intervention programs means that they're going to tell us that we have to raise taxes. And they're even going to dictate to us the tax items that we have to increase taxes in. And unfortunately, just like the Kenyan situation, we're going to have social rifts, social cohesion further destroyed, because a lot of Nigerians do not have the threshold to take in the tax burden that is going to be placed on us by virtue of that decision for us to pay more taxes because we want to access IMF or World Bank funding. So yes, the implications are that we're going to have further social unrest or protest because of the taxes that we're going to pay. So our tax burden is going to increase. Social unrest would be generated or precipitated by virtue of this increase in tax burden. That's the picture, really, in all honesty.
Okay. Now, he also talked about, you're talking about tax now, and I remember reading about, him saying that they should increase the tax net for Nigeria. And, despite the huge amount of tax collected, Nigerians, are up to their necks on tax. And, the fact that the Presidential Tax Committee has actually recommended an upward review of VAT as well. Now, Bill Gates still states, that the tax collection in the country is very low. Do you agree with this?
Bill Gates is right. The data is there. We have our tax collection ratio is one of the lowest in the world. I'll give you another stat. Our tax collection ratio to GDP is just 10%. There are countries on the African continent that are doing 80%, 75%, 77%. So our tax collection rate is incredibly low. The data is already there. How can you be a functional economy when your tax collection ratio to GDP is just around 10% or lower.
So you agree that that more taxes should be collected, more tax should be collected from Nigerians, despite the whole how the economy is going at this point.
No, Darshan, my argument is nuanced, and here is why the nuance has to be applied. Of course, I agree that we need to increase our tax collection ratio to GDP. There's no doubt about that. But we shouldn't take that increased tax burden or tax collection exercises now. You cannot tax on productivity or lack of productivity. Exactly. What you're going to do is cause more social unrest, and social cohesion will be deteriorated. That's just the truth. So the steps that the government should be able to make is to first and foremost demonstrate in good faith, demonstrate that they are ready to do the right things, that they are ready to cut down the cost of governance. Once you are able to demonstrate that, then you start to win the trust and the faith of your citizenry. And your citizenry will now say, okay, I'm going to be able to take those taxation burdens because I know that my leaders are now cutting down their salaries. They are now cutting down the number of aides that they have. They are now cutting down their exorbitant or exuberant purchases. But when you're in a situation where the head of state is buying a new private jet, spending incredible amounts of money on the vast number of aides that he has, spending on items that the country actually cannot afford right now, you're not going to win the trust of people to take on that tax burden. And it's going to cause further social unrest. So while it is imperative that we increase our tax collection rate, if the government cannot demonstrate in good faith its ability to run a shrewd and frugal government, what we are going to have as a consequence of increased taxation is social unrest. And you cannot govern a country that is in disarray. That's just the truth. So we have to combine not only good economics, but good governance and good political science. And the good political science here is that if you're increasing taxes without reducing cost of governance, then you are bound to fail.
Okay, so aside reducing the cost of governance, how about investing in the people and also improving their lives?
Sorry, I didn't hear that. The rain is immense over here in Abuja.
Can you hear me now? Can you hear me?
I can hear you now.
All right, I'm saying aside, reducing the cost of governance, how about investing, these taxpayers' money in the people and also improving their lives, just as Bill Gates also actually said when he talked about investing in healthcare and also in education?
I completely agree. You're right. And Bill Gates is right. A demonstrable step is that with the very little resources that federal government has, they have to prioritize human capital development. And one of the things that Bill Gates highlighted when he was talking to the leadership of Nigeria in the National Economic Council was that the distribution of scarce resources from the federal government to core parts of our public healthcare system, especially around primary healthcare, was very small. And that's the truth. If you look at the data, the burden on our public healthcare system actually comes from our primary healthcare subsystem, which is our primary healthcare centers. Most of the disease burden, most of the disease occurrences, most of the maternal mortality rates and child mortality rates happen in our rural areas, those areas where primary care are seated. So primary care distribution of financing from federal government has to increase. Our state governments as well, who are now having increased PAC allocations, have to also prioritize spending for primary care, the primary care segment of our public health care system. They have to also prioritize spending in our public health education system. They have to prioritize spending in infrastructure in our local areas, in our rural areas. So not only the federal government, the state governments and the local governments have a core responsibility that while we want to increase taxation, one way to be able to increase revenue is to actually spend back to the people. And the only way to do that is increase investments in human capital development. So Bill Gates is spot on. This is the approach that the federal government should be able to carry on.
Oh, well, Basil, but any form of, taxation right now, any increased tax right now would make the government seem less empathetic towards the plight of Nigerians. So how do you think that, Nigerians can be encouraged and not squeezed to be able to pay more taxes, especially with the talk about, the added VAT to 10%?
Like I said again, you're spot on. My argument here is the only way you're going to win the trust of people to want to pay more taxes is if you show them how your tax money is going to be paid. So the onus is on the federal government, the responsibility is on the federal government, and of course the underlying state governments and the local governments to start to make push towards transparency and accountability. And one way to do that is to be able to be very forthcoming with your books, show people the implementation statuses every month of how you're spending budget monies. And then thirdly, of course, like I said, again, so that I don't feel like a broken record, it is important for government to demonstrate that it wants to cut down on government costs, governance costs. And aside from showing that or willing to show that, you actually have to cut down on government costs. So governance costs have to be cut down. And when you do that, you win the trust of the citizenry to want to pay more taxes. Anything other than this is looking for trouble. I use historical anecdotes and antecedents. Yeah, we all know what led to the French Revolution. The debt situation was untenable. The creditors, mostly the United Kingdom, of course, the Great Britain, the Kingdom of the Great Britain, could not further give them financing or debt financing. And this made the ancien regime struggle to want to be able to pay what it was owing. And because of this untenable situation and the fact that they couldn't raise domestic revenue, we all know what happened. Let them eat cake or quad, and then, of course, the terror or the reign of terror emanated. And that reign of terror, of course, demonstrates or exemplifies that French Revolution. And this is the case of most revolutions that we've had in the past 200 years. It is mostly a public debt situation that the state or the governance structures cannot manage. And then because of these conditions, the people revolt against the state. Now, we're not hoping for that to happen in Nigeria, but I'm saying that if you want to increase taxes without demonstrating to the people that you're really keen on governance cuts, you're going to precipitate social unrest. And that's not the situation we want for our dear country.
All right, Basil. Now, we know how much of a challenge it has been for Nigerian leaders to be able to raise revenue and also move us, to an export economy rather than an import economy. Is there a possibility of overcoming any political and economic factors, that have hindered our revenue mobilization efforts?
I know for sure that there's a possibility for us to overcome these hurdles, but like the maxim in economic spaces right now, the maxim, and I'll say what the maxim is, politics frames economics. We have to change the way we do our politics. It's just the truth. When you do that, you demonstrate to the private markets or the private sector that you're ready for governance, and you galvanize their interests as well as their investments. And when you elicit and get their investments, you're able to mobilize more revenue. And the more capital investments we get from private sector, either domestically or internationally, the more we're able to get people employed. And the more people that we get employed, the more they're able to pay their personal income taxes. And the more our corporations or the corporations that are bringing in capital investments are able to pay their CITs, what we call corporate income taxes. So when you start to have an increase in corporate income taxes and personal income taxes, you have an increase in domestic revenue mobilization and the economy gets healthier. But the only way to do that is to change the way we do politics. And that means our state governors, our public office holders on the federal government levels have to start demonstrating their abilities to cut their frivolous ways of spending. We need to cut that frivolous ways of spending. We need to cut governance costs. We need to make sure that anything that is expensive but unnecessary is cut out of the way. We need to operate lean governments. When we start operating lean and frugal governments, then that will elicit the interest of private sectors who are bringing capital investments to our productive capacities. And with that increase in productive capacities, there is an economic bidirectionality that elicits a multiplier effect. That multiplier effect basically means that we have more people who are willing to pay taxes and more people who are paying those taxes. And when you pay more taxes, domestic revenue mobilization increases. That's just the mechanism with which we're going to be able to curtail or surmount all of these hurdles.
All right. So when you talk about more people, paying taxes, and the economy getting healthier, let's not forget the challenge of Nigeria's growing population. Nigeria has, one of the highest population in the world. How can the government address, the resulting pressures on infrastructure and also resources when it comes to our population?
Yeah. So this is a very tough situation. You know, let me not belittle the complexities of these problems that Nigeria is facing. We're facing a once-in-a-lifetime governance problem. And the complexity of this governance problem will need all hands on deck. We need a lot of data infused in our decision-making process and a dedicated governance cohort that are ready to do the right things and make sacrifices. Now, to answer your question, the first step, like I said, the first step is to change our politics. Our politics must not be the one that incentivizes or elicits interest of people to want to come and take in money, you know, for self-aggrandizement. It has to be the one where we are upgrading governance structures and looking for the best fit for positions in government. When you're able to do that, you're getting the right people with the right mindset, that they're getting into public governance to serve the good of the public. And when you do that, you start to see people who are operating in governments, you start to see people who are accountable, you start to see people who are demonstrating high levels of transparency. And like I said, the multiplier effect of this fixing of governance is that you're able to start to bolster domestic revenue mobilization. And the bolstering of domestic revenues incentivizes other participants in the macroeconomy, as well as society, to want to take seriousness in investing in infrastructure. Now, we have a $1 trillion infrastructure deficit. And with our increasing population, right now about, if I'm not mistaken, about 216 million people, that's our population size. And it's going to keep increasing. And it's going to keep putting a burden on our already archaic or dilapidating infrastructure with an infrastructure deficit of about $1 trillion. That picture basically paints that when you fix governance and you incentivize both domestic revenue mobilization and international revenue mobilization, you are able to channel those investments in core infrastructures. Another part to do that, again, is by decentralizing governance. So we need to really take restructuring properly. I like the fact that we now have an electricity act that has decentralized electricity generation. That means state governments and private sector players can now incentivize international capital as well as local capital to build new power generating plants. And with more power generating plants, what happens? There is a need for you to expand your already frail electricity transmission and wheeling capacity. And when you expand in your transmission wheeling capacity, basically it means that you're able to generate more power and distribute and transmit more power. And what that does is that your power infrastructure, for instance, gets better. So your power infrastructure being better can cater for the increase in not only urban area population, which is really high at the 55% to 45% ratio, with the rural, the 45% ratio going to the rural areas, who also have demands for electricity. So this example with the Power Electricity Act and the decentralization of our power infrastructure enables for investments to come. And so when you translate that decentralization into railway infrastructure, for instance, which is also, again, very important that I highlight, states can now invest in railway infrastructure. This was not the case 2 years ago. With this kind of decentralization, channeling it also to decentralizing our port infrastructure, we will be able to galvanize more capital investments to invest in our infrastructure base. And when our infrastructure stock continues to improve, we're able to cater for the increase in population. It's very difficult, but if you follow this mechanism, you can't go wrong.
Okay. Well, you've really spoken well, Basil. Thank you so much for giving us your time and also speaking to us on this very important topic. Basil Abia, co-founder, Veriv Africa, all the way from Abuja.
It's an absolute pleasure, Doshan. Thank you.